Sticking with energy right now, we want to speak with Dan Yergin. He is S&P Global Vice Chair and author of the new map, Energy, Climate, and the Clash of Nations. And Dan, welcome. Good to have you here, and great time to be able to ask you what you think about what's happening in the Permian Basin.
I think the Permian Basin is sort of center number one, and what you're seeing is obviously bulking up as companies are seeking to get scale and to become more efficient. And, you know, the proof is in the pudding. A year ago, people thought U.S. oil wouldn't increase very much. It's increased by about 1 million barrels a day. So companies really want to be centered there and be in a big position there and gain those efficiencies that come from scale.
Yeah, and a big part of the reason is I think that Occidental was able, at least in some of the areas in the Permian Basin, to be profitable at $40 a barrel for oil. So even though oil prices haven't gone to the highs that some people had been anticipating, right now, this morning, WTI is just above $70 at $70.89 a barrel. This is the place where it's a lot easier to be profitable. And as you mentioned, the ability to really scale up. I know that was a big deal for ExxonMobil with Pioneer, the idea that they bought all this additional land, brought in all this additional land that was very near their existing areas where they operated. That's what you're talking about, those efficiencies of scale?
Well, efficiencies and technology. You know, the drilling rig count is down, and yet production's really going up, showing that people are able to achieve much greater efficiencies than they were even a few years ago. And you know, of course, you just mentioned the oil price, and that reflects the fact that you have this huge surge of new oil coming from the United States, from the Western Hemisphere, led by the United States, but also Canada is at a record, Brazil's at a record, Guyana, which is in the news for other reasons right now, is also coming on very fast, and all of that is weighing on the oil price.
All of this is dependent on where things go, and I mean the Occidental move that Vicky Holub made to buy Anadarko didn't come at a great time, because then you had COVID and energy prices plummeted, went negative for a while, and that raised a lot of those things into question. Is that a one-off, though? We look at oil prices down a little bit to $70 because of the concern about global demand, again, as we're heading maybe potentially into a slower time. But what we saw with COVID, I don't think anybody anticipates that we're return to something like that.
We're certainly hoping that COVID was a one-time event. This is back to supply and demand, not a virus. And of course, the Anadarko purchase by Occidental seemed controversial at the time, but it's really been made Occidental even a stronger player among the major companies.
So, Dan, what is happening right now with demand around the globe for oil?
Well, the central thing is that demand is growing. China's reopened. It's not going to reopen again. So demand next year is expected to be about 1 million barrels a day less than the growth of supply. And as long as supply and demand dominate, you're going to have that downward pressure on price. For the OPEC plus countries, they've been cutting and said they'll make further cuts. The choice for them is, do you keep cutting, or do you do what happened in 2014, let the price slide and sort of pull our cold water on developing new supplies? But Becky, as we've talked before, there's still the question of risk out there. And we've seen it in terms of Venezuela and Guyana, and we see it now in the Red Sea, with the Houthis starting to attack shipping.
Right, and you bring up Guyana, too. That is certainly where Exxon and Chevron have both placed big bets. Exxon as the developer there, and then Chevron with this bet on Hess, made a big deal about Hess's assets and the part of what was happening in Guyana. But we have seen some concerns about what Venezuela is going to do there. Last week, people were saying, the people we spoke to at least, were saying it's not that big of a deal. You sound a little more concerned about what could happen there.
Well, so far, it's more bluster. I mean, Nicolas Maduro, the dictator president of Venezuela, had this farcical referendum where maybe 10% of the people voted, claiming 2/3 of Guyana. But what's really piqued his interest is the offshore oil. I think right now it's not taken as seriously, and the U.S. has strongly indicated, including with overflights by jets from the Southern Command, that it stands by Guyana. Guyana is very important because it is the fastest growing offshore oil development in the history of the world. Uh, Maduro's in a weak position. A quarter of the people of Venezuela have become refugees, fled the country. But the risk is that he will do something, that he might seize a piece of territory, plant a flag. And of course, you have to keep in mind that Maduro's close allies are Russia, Cuba, and increasingly Iran.
So geopolitics going to be the most important thing driving the oil price market over the next year, or is it going to be supply and demand?
Well, I think it's going to be supply and demand. The area
by geopolitics.
I mean, I think in terms of Venezuela and Guyana, that the view that it is probably more words than action. I think the area to be concerned about is a strait that people don't normally talk about called the Bab el Mandeb, which connects the Red Sea to the wide oceans. And about 9 million barrels a day of oil pass through that, a lot more because of sanctions on Russian. So Russian oil going south, Middle East oil going north to Europe. And the Houthis seem to feel that they're invincible, that they can attack U.S. naval ships. So I think that's the thing to watch for a geopolitical factor that could affect it. Otherwise, you're looking at supply and demand and not great economic news coming out of China.
So, Dan, I know this is a fool's errand, but trying to predict where prices go over the next year, what would your guess be with everything you know?
Well, I think that let me put it this way, I think in the first part of the year, barring a geopolitical problem, you're going to see a lot of downward pressure on oil prices, big efforts by the exporting countries to keep the price above $70 a barrel. I think that their bet is in the second half of the year, demand comes back more strongly and the market is more in balance. But right now, we're in a time of downward pressure on the market. And this is one of those times when it's supply and demand that are calling the shots.